time to do it again, to go around the world of business in 55 minutes. Welcome to Business Incorporated. Here's what we have prepared for you in the next 55 minutes. Not a very good one for Nigeria, as it's set to drop to the 4th position from the 1st. Talking about the economy in Africa. Egypt's debt to GDP declines, but that's for 2025, not for this year. And the interesting world of crypto, it counts down to halving, less than 24 hours to go. Good afternoon, I'm Ini John Mekwa. Welcome to the program. Now let's start from the global space as usual. Oil prices jumped on Friday as reports that Israel had attacked Iran roiled market and sparked concerns that Middle East oil supply could be disrupted. The benchmark contract surged more than $3 before easing slightly. Brent futures were up $1.40, that's about 1.61%, at $88.51 a barrel, while the most active U.S. Texas, West Intermediate Texas contract climbed $1.38 to 1.68% to $83.48 a barrel. Israel launched an attack on Iranian soil on Friday, the latest exchange between the two countries that threatens to drag the region deeper into conflict. Iranian media reported explosions, but an Iranian official said that those were caused by air defense systems. According to state media, there were 3 drones over the central city of Isfahan had been shot down. In global space, a crude oil supply, Venezuela lost a key U.S. license, allowing the OPEC member to export oil to markets globally. U.S. also announced sanctions on Iran, another OPEC member, targeting its unmanned aerial vehicle after the country's drone strike on Israel. The sanctions on Iran, however, excludes its oil industry. Gold prices rose on Friday as reports that Israel had attacked Iran prompted fears of a wider regional conflict, increasing bullion's safe haven appeal. Spot gold rose 0.1% at $2,380.75 per ounce, after briefly jumping as high as $2,417.59 earlier in the session. Prices hit an all-time high of $2,431.29 last week. Bullion was set up for a 5th straight weekly rise. U.S. gold futures slipped 0.1% to $2,395.50. Meanwhile, Federal Reserve policymakers have gathered around the idea of keeping borrowing costs where they are until perhaps well into the year, given the slow and bumpy progress on inflation and a still strong U.S. economy. Now we come to Nigeria. The Association of Mobile Money and Bank Agents in Nigeria, AMBAN, have started what it terms as self-regulation and cleansing by creating a task force to monitor activities of members and even non-members engaged in agency banking activities. The body is preaching against selling of the Naira and seeking ways to bridge in areas in the country where there's excess cash and areas where there's shortage. The national president of the association, Sharafuddin Fasasi, says that this will form the major responsibility of the agent joint task force.
If you are well trained, you will not engage in cash sales. You will not be selling cash because you understand that your job is not to sell cash. Your job is to do what we call cash in, cash out, to do transactions. So not for you to go and be buying cash. But today we have a lot of people that are not agents. They don't understand it. There are 2 angles to agency banking. You have the service angle and the business angle. The service angle is for you to create access points where there are no banks. Am I right? So, and it is not for profit. It's for you to say, and that was when we started. You will discover that, where bank cannot settle, bank cannot thrive, that is where we normally set up. And that is where our services are most needed. Unlike today, you will see agents standing beside the ATM machine. They will be praying that ATM machine will not, you should stop working so that they can start selling. So, and these are the part of people that this task force is going to take out of the system. Selling of cash is criminal. We know that we have shortage of cash, and we believe that Nigerian transactions are still cash transactions. Most of it are still cash. So instead of us to be buying and dealing in cash, we would rather walk up to CBN. It's not that there are no cash in circulation. The problem is distribution channels.
So that's it, here on business. Our business programs will be preaching the gospel of let the ATMs be filled, for a long time. So we're glad now that the operators themselves, the POS operators, AMPAN, their body there, they are taking some steps to ensure that their names are not, or their name is not tarnished, and all of that. So we'll see how that goes, talking about their task force to help ensure that members are doing business according to how they should do. Now, one of the stories we have our eyes on this afternoon is that story that Nigeria may have already or may be losing its leading sports as the biggest economy on the continent and going down to as much as number 4. Well, the major driver, according to Bloomberg, is the devaluation of the Naira. We spoke to Mr. Bismarck Rawani about this earlier today during Business Morning, and he did say that perhaps that was the status in December, but with the appreciation of the Naira, in the last few weeks, that may not be the status. But let's get another perspective to this. The Managing Director of No Sananke Solutions Limited, Mr. Femi Onokore. He's with us in the studio. Mr. Onokore, good afternoon, and thank you so much.
Good afternoon. It's a pleasure to be with you.
Yeah. So, I don't know, what do you think about this? That Nigeria may at this point be the 4th biggest economy, losing our first, losing the second, losing even the third?
Well, yeah, in all honesty, I would like to see the basis for that evaluation. As of last, this has been seen, Nigeria is still like maybe top 3 economy in Africa. But even if that were to be the case, with the appreciation of the Naira in recent times, I do not think that position holds true. Fundamentally, if we talk about GDP, in terms of GDP, and that's how I usually measure stuff, there are critical elements, that of the GDP projection of a country. You talk about consumption, you talk about government spending, you talk about investment and net exports. Regarding consumption, which is the biggest factor in the GDP projection, consumers' ability to spend, purchasing power of the Naira, critical issues. Inflation is one of the biggest issues on the table. Headline inflation has been increasing, right, which of course impacts negatively on consumers' ability to afford a lot of things. And food inflation is about 40% right now, which also constrains the ability of individuals, right? But in all ramification, the Q1 of this year, the country has performed reasonably well. Currency has appreciated. There's been commitment from the government in terms of government spending to stimulate productivity and growth.
Yeah, so, well, currency is appreciating. Now we've seen it drop for, I think, the last 3 days. So I don't know what's going on. Was it a fluke? Are we going back to the appreciation, or is this stability we're looking at?
Yeah, from our previous discussion, I've always said that the important thing is not the figure. The important thing is to find a sweet spot, a balance, so as it were, that can be sustained, right? A stable position for businesses and investors to use as a benchmark for projection. The fact that it fell is an indication that prior to this point, there were disparities in the market in terms of the demand and supply end of the market. If the demand was as high as it allegedly was when it was selling at astronomical rates, then if the CBN is offering a lower rate, it means that whatever the CBN is offering will not be sufficient. The market will mop it up and the price will still continue to go high. As it is right now, the CBN is still trying to find the right spot, because fiscal policy will now be built on this, and it is on the basis of this that we can now properly tackle issues like inflation and other macroeconomic indicators in the economy.
So would you say that, I mean, a couple of days, even before the Naira stopped appreciating, this last few days, there was the conversation of Naira is gaining and yet inflation is still high. Prices haven't started dropping, even though now I think, because yesterday we saw the bag of rice, 50 kg, started tapering from about 90, 80 to about 75 and 60. Not pleasant at all, but I mean, how do we balance it now? Talking about prices and the gain in the Naira, because we see FCCPC also bringing up another side of the conversation that perhaps
price gouging.
Some Nigerians are exploiting Nigerians, consumers.
That's price gouging, and this FCCPC is trying to do a bit of it. They sent out a communication regarding helplines you can report to. What you said earlier is very interesting. It comes down to inflation. So we need to first understand the kind of inflation that operates in the mix. There's a demand pull kind of inflation, which is there's a lot of demand, but there's few supply. So naturally, supplier will increase its price. There's cost push, which means the cost of production has increased, right? Which naturally the supplier still wants to make his profit, is going to push that in. And there is money supply variation. There are other things that are also elements of that, like increase in wages, devaluation of the currency, as you said. In our own case, the Nigerian system is a bit peculiar, and that's why I think we should have a bit more patience with the fiscal policy managers, the monetary policy managers. Inflation in Nigeria, the demand hand is fuzzy. So we talked about the denomination of the Naira and how changes in prices do not follow the decimal position. It jumps in absolute terms. So things, if you have an increase in price, but like maybe overall cost increase of 5 Naira, by the time it gets to the consumer, instead of spreading across the volume of the product, it adds 10 Naira, which does not make any sense in terms of cost push. But the bottom line is that the consumption, which is the price, spending power of the consumer, has been reduced, irrespective of the actual cost push element that supposedly drove the price up. You are going to have an increase from 70 Naira to 100 Naira for a good that actually the cost push end of it is only increased by maybe like 5 Naira or 2 Naira. Why? Because we don't have smaller notes, for example. Because people will say that it's hard to get change. Stuff like that are artificially contrived. Then there's the other part of people exploiting others. In Nigeria, I found that it is very popular. Blame the government, say this political party is bad, this person is horrible, this one doesn't know. And then you can almost get away with murder. That's a problem that we need to have reorientation, because it is not an isolated thing. If the country is good, it's good for all. If the country is bad, it's bad for all. The exploitative tendencies of middlemen and traders also need to be, contained. If the value of the currency before was being used as an excuse for increased prices, if the currency has gone down, what has happened to the cost push part of it? Then it shouldn't really be a factor again. What is creating the continued inflationary thing? You can't say that it's restocking cost that's creating the problem. You couldn't have restocked for 3 months since January, and that's the reason you are. Do you understand? So there are several elements in it. It will take a while to sanitize the system. The concentration.
But we're on the right track from your perspective.
Exactly. That's what I feel. I believe that the fact that we are understanding the problems that we have groomed over time, and we have all accepted as truisms until some of the debunking came along, we have an expectation that things are going to get bad. And right now, a lot of people are still quite skeptical when it was appreciated, like, oh, is this a fluke? How is it happening? What's going on?
So do you see us going back to the appreciating of the Naira?
For me, it's not so much the appreciation or the devaluation at this point. In our model that we designed for the Nigerian ecosystem, what we are looking at, and that's how we're evaluating the CBN's policy changes, monetary policy changes, and fiscal policy from the Ministry of Finance. What we anticipate is that government spending and productivity measures, how are they pushing forward on it? How quickly will they be implemented? How quickly can we start seeing results? We can make projections in terms of inflation will drop to sub 30 and all that. But if we're not seeing the actual impact of currency appreciation in consumer spending, if we're not seeing increased productivity and availability of power, for example, we're supposed to have like 30 what's it called? Megawatts, and we're doing like 6. No, don't. And projection is for by 2030 we should have 30, and 2024 we still have just 6. That's always going to affect production. It means that local manufacturers, are going to depend on diesel and alternative energy sources to power, which goes into the cost push element again and drives up inflation, even further. So it is those mix that really should be of concern. Once we find that stable point in terms of what the value of the currency is as against external currencies, and in terms of our consumption and the ability of the Naira to make purchases, we have alternatives to a lot of things we import, then we can now start holistically assessing the direction that the economy is going.
What do you see as the fair value of the Naira at this point?
Whoa, that's a tough one. It's something that we've been grappling with for a bit in the office. We have a lot of back and forth regarding it. We don't have enough information. That's the honest truth. Is the dynamics of the market. We don't have enough. We can make projections. We can say it will go lower, it can go higher. But what is the fair value? The fair value of the Naira is a derivative of a lot of elements within the economy, right? What are your import receipts, right? What are the alternatives that you have? What are your export receipts? Those things affect the value of the Naira. What's the monetary policy position of the CBN, right? What's our money supply, index? Those are the issues that we need to address. Once we have those, and it's really still fuzzy for a lot of people. When the CBN started on the reforms, we couldn't see a lot of changes or movement until the appreciation, started. In fact, some people were making claims that it's artificial, but when it became sustained over a while, a lot of naysayers.
But the test is here. The Naira started dropping. The test is here. So I mean, let's see if it's artificial or not.
This is how it should be. We should have a band, a spectrum of possible fluctuation. It's not as if it's always going to go on a lower trajectory. If the demand and the market resists it, right, definitely the Naira will devalue to the proper
because the
rate.
NAFTA still yesterday had scarcity of liquidity.
Exactly.
Yesterday at the close of trade. So, but anyway, our CBN governor will be back from Washington, and and he will continue where he stopped.
No,
so I think they've done a lot of talking there. Yeah. Even though the Minister of Finance had told us from Washington that they were going to get financiers, to some of the reforms and their plans. So,
yeah, like we said about the GDP, investment is a key element in GDP. I mean, what's it called? GDP position. Fiscal policy needs to drive investment and comfort in the economy. As it were now, we've spoken with a couple of investors who are a lot more comfortable with the balance in terms of the FX position. Now, the other concern they will have is repatriation. CBN has cleared obligations, a backlog of obligations, so that also gives some comfort. Can this be sustained? Our reserves are okay, fine, some appreciation and additions, right? It will settle receipts, it will reduce. Crude oil sales price is pretty okay, so it means that we have more inflow in terms of, so there's so many things that to look at and just find a holistic middle point.
All right, thank you so much for your time, Mr. Femi Onakonre, Managing Director of Nusananke Solutions Limited. Certainly, Nigeria's economy is an interesting topic at any time. Yes. Well, thank you.
You're welcome. It's a pleasure.
All right. So now, the global economy has shown remarkable resilience and appears headed for a soft landing. These are the words of the Managing Director of the International Monetary Fund, Ms. Kristalina Georgieva, who was speaking at the IMF World Bank event in Washington, D.C. As you know, our correspondents are there. We hope to have one of them join us before the program ends. Ms. Georgieva explains that although buffers have been eroded, growth prospects are lackluster, and vulnerable countries are at risk of falling further behind.
There is plenty to worry about. Inflation is down, but not gone. In the US, strong economic performance has a flip side. this inflation is taking longer than expected. Medium-term growth prospects at around 3% are the lowest in decades, held back by a broad-based slowdown in productivity. And divergences within and across groups of countries are growing, with poorer countries falling even further behind. In a world where crises keep coming, countries must urgently build fiscal resilience to be prepared for the next shock. As hard as it is, when still part of the population needs support and half of the world is going to the polls, the time has come to adopt medium-term frameworks for fiscal consolidation. We recognize one size does not fit all. The pace and speed of consolidation will vary depending on country circumstances. So will also the balance between mobilizing revenue and improving spending efficiency. What is very important is not to forget the burden should not fall on the most vulnerable people.
Well, that's it. The managing director for serving her second term. We say congratulations to her, first of all. But she has a whole lot on her shoulder. Obviously, it's not just a Nigerian matter. It's the world matter, issue of fiscal consolidation she's asking for there. And I know that we should get a bit of update, more conversations at the spring meeting, which ends tomorrow. Been a busy week for some of our correspondents, two of our correspondents, Julian Olayinka and Sarah, who are there covering the events. Let's head to the markets now, see how that's doing. We saw at intraday that the NGX recorded a bit of a green, comforting to the heart, but I mean, you don't have to put your mind because it's just so marginal compared to especially where we're coming from. 0.05% in the green is the number that we have, still below the 100,000. If we could have the numbers on the board for that. So it's green today, intraday, not today, because we don't know how the market will close at 0.05%, 99,899.06. So really sleepy right there. We still have some way to go before 100, before we can comfortably say we could be heading to 100. Because we don't know how that will be. For JSE South Africa, they're deeply in the red, 0.73% at 72,736.94. That's for South Africa. Egypt is so red at 4.50%. It would be nice to speak to somebody there and find out. I mean, losing more than 4%, 4.5%. is a big deal in one day, in one trading session. We see Kenya is also down. This is Thursday's numbers at 0.80% at 108.43. Now let's come back to Nigeria and look at our fixed income market. We know that market is taking a lot of shine these days because of the attractive yields to investors. It's been doing us a lot of good, at least according to the central bank governor. This is maybe one of the sources that's being used for intervention in the FX market, so it's a good one for us, even though the government will have to pay for it in a later date. So let's talk to Kolawole Komolafe. He's a fixed income trader with Access Bank. Hi, Kolawole, good afternoon, and thank you for your time this afternoon.
Hi, Ini, how you doing? Good afternoon.
Yeah, so the fixed income market has been getting a lot of attention. I don't know if it's to the detriment of the stock exchange, the NGX, but the good thing is it's all in Nigeria. But bring us up to date. How would you describe activities this week at the fixed income markets?
Okay, thank you, Ini. So this week, the major market event on the fixed income space was the bond auction that happened on Monday, where the DMO offered 450 billion naira across the 2029, 2031, and 2024 FGN bonds. Total subscription at that auction was at 920 billion. However, the DMO allotted only about 626 billion naira, with most of it tilted towards the 10-year paper, that's the 2034 paper, and the stock rates closed at 19.30 for the 2029, 19.75 for the 2031, and 20% for the 2034. So that was a major market event that happened in the bond space. That was at the start of the week. On the NTB space, we've seen a lot of offers where people are looking to sell their holdings, to sell their positions, but we've seen just very few bids to hit those offers, and the FGM bond space has been relatively muted. I talked about the auction that happened on Monday. That's the major event that happened in the fixed income space. And you're right, the yields have been very, very attractive. The 1-year paper at the NTB auction that happened on Friday, for the 1-year paper, it closed at 20.7%. That's a discount, which gives you a yield of about 26%. So you're right in saying that this is very attractive. We've seen a lot of people, both the FPIs, that the foreign portfolio investors, and also local investors, heavily invested in the fixed income space because the yields are quite high. They've been high or at those levels for a while, and we expect that's what would have also going forward. It seems to be a strategy that both the CBN and the DMO is using to attract investors into that space.
Yeah, but it comes at a cost. Do you see the government continuing with this trend of increasing yields? I mean, we're talking of debt servicing here.
Yes, so you can't have your cake and eat it. Something has to give, right? Yes, you're right that this is increased cost of borrowing from the government, but we understand that these are short-term measures, right? While the medium-term to long-term measures then kick in, just to see that the exchange rate is stabilized, because of the high yields on these fixed income instruments. You've seen a lot of carry trade where foreign portfolio investors bring their funds into the country because they want to get a piece of those high yields. So yes, on one side you have increased Naira cost, but on the other hand, you've seen relative stability, or a great deal of stability on your exchange rate. You saw there was a time that the exchange rate was high as say 1,500, 1,700 on the official space, but now yesterday and NAFEX closed at about 1,138. So it's because of these short-term measures, and the expectation is that over the medium term and the long term, the fiscal side would also support greatly the efforts of the CBN.
Yeah, I guess they will have to. Now that we see, it seems the Naira is, I don't know if to call it stabilizing or depreciating again. But thank you so much. We have to draw the curtain there. Kolawole Komolafe, fixed income trader with Access Bank. Thank you.
Thank you.
All right, now let's head to the Middle East and see how that market fared at intraday. So we see Abu Dhabi is in the red, 0.43% at 9,143.19. Dubai also in the red at 1.13% in the red. Saudi Arabia is positive, however, but this Saudi Arabia doesn't trade today, so these are yesterday's numbers, the way they closed yesterday, 0.29 in the green and Qatar in the red. From there, we head to the United States, where stock futures fell early Friday because of that conflict between Israel and Iran. Now, see how the tables turn. And of course, we do remember that the US has put some sanctions on Iran, even though it's not supposed to affect their oil industry. But you know how these things zip around. So we see Dow Jones gained or recovered a bit, 0.06% at 37,775.38. S&P in the red, 0.22%, and NASDAQ also 0.52% in the red. So I think they've gone past the area of earnings, the latest batch of earnings. Netflix, I know you've been interested in that, have also announced their earnings, and that's part of the drivers of the market. We have our correspondent in Washington to give us a bit of details on Thursday's trade.
The U.S. stock market had a bit of a struggle on Thursday as the Dow Jones was slightly up, just above flat line at 0.06% up. The S&P 500 had its fifth straight day of declines, closing at 0.2% down. And the heavy tech Nasdaq had another rough day, closing at 0.5% down. It is clear that the tech industry is still showing a bit of troubles after the Federal Reserve announced that inflation rates would continue on the rise and that interest rate cuts might not happen anytime in the near future. This has caused many investors to be concerned, and this shows the U.S. economy could be struggling a little bit more than what was once expected.
All right, let's go to Asia now. That market is closed because of the time difference. Taiwan's weighted index led losses in Asia on Friday, falling by 3.81% and closing at 19,527.12. That's the lowest level in over a month as most major markets in the region fell, escalating tensions in the Middle East. Let's look at the numbers for Japan's Nikkei 225. 2.66% in the red, 37,068.35. Kospi also follows 1.63% at 2,591.86. Hang Seng Index almost 1%, down 16,224.14. Other markets in that region, Shanghai is also red. It's the fear and the uncertainty that comes with regional conflict and tensions. Right? Even Australia is caught up in that also, 0.98% in the red. All right, now let's take a break now. When we come back, we'll head to Europe and also we'll tell you more about what's going on at Washington at this time as the meeting heads to a close. Join us again. Welcome back to Watching Business Incorporated right here on Channels Television. We head over now to Germany, where the German economy minister made a surprise visit to Kyiv yesterday, touting German support and business interest in that country. And we know that's a country that is at war at this time. Well, I wonder what kind of business they will have to do there. But Cassandra Sant joins us now to give us details. Hi, Cassandra. Good afternoon. So tell us more about this visit and perhaps the areas of business that the minister hopes to get.
Well, thanks for having me, Inni. I should start by saying there were a few ceremonial aspects to the visit, including Mr. Robert Habeck laying a wreath at a memorial for fallen Ukrainian soldiers yesterday, but business, and specifically the business of defense and rebuilding, was high on the agenda. Let's look at the energy sector, for example. Russian drone and missile attacks on Ukrainian power plants have intensified in recent weeks, and as Russia renews these aerial assaults, Ukraine's air defense systems are running increasingly thin. This has meant power cuts to not only homes, but also industry. So there's a direct line there between defense systems and the ability of the Ukrainian economy to function. Last weekend, the German government announced it would supply Kyiv with another Patriot air defense system. It's reported that Ukraine has a minimum of 3 operating Patriot systems, but 1 battery is damaged and needs repair. Earlier this month, Ukrainian President Zelensky said his country needed 25 Patriot systems with up to 8 batteries to, quote, cover Ukraine completely.
So what other industries, apart from this energy, what other industries is Mr. Habeck interested in?
Habeck did not travel alone to Ukraine. With him was a delegation of at least 20 business people. Defense and energy sector representation were both very notable to me. For example, the head of the German Solar Industry Association has said that he's seeing huge potential for solar energy in Ukraine, both in the short and long term. He's pointed out that solar energy is affordable, reliable, and can be easily deployed. And it's not as easy, according to him at least, to turn it on and off with a tax. Currently, according to Kyiv, there are 200 promising projects in the energy sector totaling $60 billion, including solar and wind power plants. Habeck is also trying to point out how attractive Ukraine is to German companies for short and long-term investments, saying that Ukraine is moving towards the European Union's single market and it has a well-educated and young population. Habeck called this ideal for partnerships from an economic perspective. And Germany really has looked to encourage private business investments in Ukraine with guarantees to limit risks. According to the Ukrainian government, there are 46 guarantees in place for investments. The volume of exports under German guarantees in 2023 was worth about 170 million euros. And the German government said that nearly 55 million euros worth of investment protection was approved last year.
Interesting business in the war. So what's happening in the markets in Europe?
Well, European stocks dropped to their lowest levels in more than a month following the ramp up of the Middle East conflict that seems to be spooking investors around the world. There's essentially a concern that a spike in commodity prices could fuel inflation and push back a highly anticipated and rumored June interest cut by the European Central Bank. The indexes across the major European economies like Germany, France, Italy, and Spain all dropped between 0.6 and 0.9%. The continent-wide Stoxx 600 was down 0.6, and if those losses hold, the benchmark index is on track for its biggest weekly drop since last October. But if you're looking for some brighter news from the European markets today, shares of L'Oreal rose as the French cosmetic giant trounced estimates for quarterly sales, up over 5%. In fact, the broader personal and household goods sector gained 0.4%.
Thank you so much, Cassandra. All right, now let's move to Africa now, see what's happening. We're beginning in South Africa, where renowned economist Gabriel Kuru says that South Africa has many big problems and might follow in Zimbabwe's footsteps. Speaking to our correspondent over there, that's Innocent Semusa, he highlights issues such as exploitation bail, which allows the government to take property without compensation, and poor state-owned institutions. He explained that there are many reasons why South Africa might become another Zimbabwe. Let's listen to him.
Is South Africa going to become like Zimbabwe? Well, maybe and maybe not. It's ultimately going to be up to us as South Africans to decide, but I'm worried, and here's why. The South African Parliament just a couple of weeks ago, passed the expropriation bill, which allows the government to take property without compensation in a range of circumstances, including where people own the property and their primary interest is in selling it later at a profit. That's exactly the kind of legal change that was made in Venezuela before 21st century socialism collapsed the economy, destroyed democracy, and caused most Venezuelans either to flee or to literally go hungry. The second law that I'm worried about is called the Land Court Bill. If that's passed into law, it will basically turn the courts into kangaroo courts because it allows people who aren't judges to rule on matters of fact in land disputes. And it allows hearsay evidence to play a decisive role. The third bill is the Unlawful Entering on Premises Bill, which is like a new trespass law, which effectively says that a mob can, in some people's interpretation, enter a property, whether it's a town property or a thing in the countryside, because they believe reason to be there. Combine that with things like Julius Malema, the EFF leader, standing in a stadium full of people chanting, "Kill the Boer, kill the farmer," encouraging people to go and do land invasions. And the picture that you get is exactly what happened in Zimbabwe in 2000, which is where mobs of people were encouraged to go and take farms from unpopular groups and said, well, we're going to take the title deed as well, and then we're going to give these farms to the people by actually giving it to rich, connected government officials. And the economy collapsed. But you know what else collapsed? Democracy. We did an international study. In every case, in Africa, in Asia, in Europe, in the Americas, in every single case where the government was able to take the property of some people, some unpopular group, it was also able to take away the votes of some people. Who? Those who wanted to vote for the opposition, a small group. The worry is that that's going to happen in South Africa too.
Not a good picture there, comparing South Africa to Zimbabwe. We know what Zimbabwe is struggling with, even with, the new currency, Zimbabwe gold. Things don't just happen overnight. So I bet that conversation is to bring it to the fore, to try to militate some of those eventualities that could lead to a not very good picture. Now we move to Egypt, where overall debt to GDP is expected to decline to 82.6% of GDP in 2025 from over 90% this year, 2024, and will continue to shrink under the country's loan program with the International Monetary Fund. This is according to the Director of Middle East and Central Asia Department at the IMF, Jihad Azor. Mr. Azor made these remarks during a press briefing at the IMF as the release of its Regional Economic Outlook report on the sidelines of the annual meetings, which of course is still ongoing. Egypt is currently engaged in an $8 billion extended fund facility loan program with the IMF. Mr. Azor points out that the increase in interest rates globally led to further increase in debt service for several emerging and middle-income economies in the region. And he strongly recommends that these countries address this issue decisively and move forward with the needed reforms to allow risk premiums to go down and also reduce the nexus of all the burdens these reforms when it comes to debt and debt restructuring could have on local financial systems. In Kenya, farmers within the coastal counties have received over 43,000 coconut seedlings from the national government to improve production. Through the Agriculture and Food Authority and Commodities Fund, the government availed the seedlings to address the dwindling coconut tree population. Agriculture Cabinet Secretary Mitika Linturi presided over the launch of the National Coconut Week in Kilifi, where he notes that reduced tree population translated to low production, leading to reduced household incomes. The coconut value chain is one of the key agricultural subsections in the coastal region and supports an estimated 1 million people due to its effective forward and backward linkages. In Nigeria, while the deadline for the recapitalization of banks is still about 24 months ahead, banks are counting down to that requirement by the regulator to submit plans to the Central Bank of Nigeria before the end of April. For the Chief Executive Officer of Stanbic IBTC Bank, Dr. Demola Shogule, the exercise has become necessary since the last recapitalization was about 2 decades ago.
Whenever there is an exercise like this, based on regulatory imperative, regulatory induced capital raise, you always expect mergers and acquisitions. You always expect, that some people will be open and ready, for things like that. And those that we go solo, we go solo. But it's good for the industry. It's good for the economy. The last exercise was done almost 20 years ago. Was it, long overdue? The answer, I would say yes. Are we prepared as an organization, as Stanbic IBTC, whether at the whole core level or at the bank level, for it? The answer is yes. Will we be able to, scale, ahead of the deadline? Again, the answer is yes. Why are we saying that? We've got, our parent, Standard Bank, with almost 70% holdings in Stanbic IBTC. So all the options that CBN has stipulated, we'll explore those options and we'll be able to scale, this hurdle very, very quick.
All right, so a confident CEO there, I guess because it's one of the major banks. But there's this perception that only about 11 banks will make it out at the end of this recapitalization. We'll see. But if 11 banks are strong enough to withhold a $1 trillion economy, I guess it should be celebrated. So it's an ongoing story, the recapitalization of banks in Nigeria. Now let's go to the crypto space where we see the color has drastically changed since the last time Ladi was here. We see it's mostly green for the crypto market, even though we're counting down to the halving, which I believe is less than 24 hours. Yesterday was about an hour and a day and 15 minutes, so that should be down now. But the board is looking green and beautiful. This is Nigeria's color, up 5.2% at 64,781.30. So if you intended to, get on board and you did not do that before now, it might be a bit late because the market is greedy as we speak, as Bitcoin has gone up there more than 5%. Ethereum is 3,102.11%. You know how they say that it's not every greedy market that you should take profit. Because of course we've seen Ethereum do up to close to 4,000 Naira, and we've seen 72,000 Naira for Bitcoin. That's the highest record so far. Solana is also green, gained more than 10%. XRP, Cardano, everybody's green except the little ones like TRX, I think majorly, and then MKR right here, really small there. So it's Doge is green. I mean, it's a green market, and that's because the market is greedy at this time. But I think the biggest story at the crypto space now is the countdown. There you see countdown to halving 2024. We've been talking about this. I'm so waiting for this to come and go so we can have another. So it's less than 24 hours. There you go. It's 11 hours, about 26 minutes. This was taken a couple of minutes ago. So yes, it's still relatively fresh, So it's 11 hours, 26 minutes. And in April 2024, the block reward will be reduced from 6.25 Bitcoin per block to 3.125 Bitcoin per block. Countdown clock is ticking. Let's have Obodo now, the managing director, chief executive officer of Phoenix Online System, talk to us about this. So we've been hearing that miners may, I think their profits will be halved at this time. With the halving, just going to happen tomorrow, Saturday. I don't know if some people will go to bed, but hi, how are you preparing for the halving, even though I know you're not a miner?
I'm not one of the stakeholders. Actually, the miners there's a lot of mixed feelings with the current price of Bitcoin because of the miners. The miners are looking towards their profitability within the next post-halving. So because BTC for now, like within the past 1 week now, is down for about 8.9%. And recently now, within the past 24 hours now, it's been up about 5% kind of. So they are kind of agitating, kind of like, are they going to make more profit in Bitcoin? Because they expected Bitcoin to actually move more than what it is right now. But because of the initial Bitcoin price getting to a new high before the halving, most of the time it has always been Bitcoin ranging between a certain price tag before it gets to halving. But this time around, we're seeing Bitcoin getting a new high before the halving. So there's a growing concern among the miners that they're going to be profitable if Bitcoin remains currently.
Yeah, so one of our guests, I think yesterday, did say that even post-halving, it will take a while before investors can start talking about profits.
Yes, for investors, it takes a while. Sometimes between 9 months to 1 year plus before you can. But the price of Bitcoin moves exponentially based on price action. So most times, because of the growing concerns of most investors that want to come into the space, they want to fast forward the profit as soon as possible. But sometimes the price does not move like that. For currently now, as we have Bitcoin now, have made a new high. So the expected target profit should start coming in within 10 months from now. But that, nevertheless, from the way the price action is going, Bitcoin should hit 85, 90,000 within the next 2 days.
Within the next how many days?
60 days.
60 days. Hello? Hello, Noah, can you hear me?
Yeah, that's for the... Yes, I can hear you.
You said within the next how many days?
The next 6 weeks, I mean.
Okay,
the next 6 weeks.
Okay, that's just about 2 months. Okay.
Yes. About a month plus from now, because apparently the price of Bitcoin, the last high the Bitcoin actually attained was around 73,000. You need to break the last high of that particular price and break that resistance to the upside and close above the resistance for us to see a new high. But currently, because of the current price action that is on the ground right now, and the halving too is going to bring the price of miners price half the price of what they used to get before. So currently, there's a lot of a pause in the market concerning the price of Bitcoin and the miners' agitations and all those things.
Okay, so the halving is in just about 10 hours or so from now. That means tomorrow, about midday or so, we would have seen the halving. What do you see both miners and investors doing? Do you see anybody sleeping this night, or you see people glued, to their devices? How do you see people transiting into this halving?
Yes, it's not a new thing anyway, but the result of the halving will be we broadcast later in the day, because the process at which they do the mining actually is quite technicalized. So people will get the result of when they come out with the meeting. So it's not really much of a big deal, but investors are actually looking at post-halving. After the halving actually is targeting more of the miners, not really the investors. But it's a two-way thing. It's targeting the miners in terms of reduction of the price of miners, while the investors are looking at, well, as the reduction of the miners' price comes down, then there's a potential opportunity for Bitcoin price to go, because it costs a scarcity in the crypto space. Less miners will be mining because of the profitability and all those things will push the price of Bitcoin up. That's where the investors come into the place.
All right, thank you so much, Onuobodo, Managing Director and Chief Executive Officer of Phoenix Online System. So it's just hours to that halving. I know more Nigerians are investors than miners, but I mean, we'll all be watching at that space and see what happens. By Monday, when we are back on the program, we'll see how that has fared over the weekend. Last weekend was bloody. I wonder what this one will look like with the halving. But anyways, that's it on the program, Business Incorporated. Thank you so much. I hope it's been a worthwhile 55 minutes. And if it's been, you can repeat the experience by going to our YouTube channel, which is youtube.com/channelsweb. Watch Business Morning, watch Business Incorporated. Until tomorrow, when Ladi Williams will be back at 7 p.m. with Capital Market to give you a recap of activities in the market. at 7 p.m. tomorrow. I'm John Mekwa. Have a great and a restful weekend. Bye-bye.